All right. Hello, everybody, and welcome to our October 16th edition of This Week in Crypto. Hope you all are doing well. For those of you who are here for the first time, what we do on this weekly talk is we talk about our on-chain and social metrics and discuss how they pertain to what is happening currently in the markets and what is a likely outcome for the future. Now, since we do this every week, we try to talk about what's happened over the previous 7 days, but you'll also see us talk about what might be a more midterm, short-term, or even long-term trend for the future of, say the rest of the year, or even going into 2021. We look at all things like what we're looking at now, our screener. We'll talk about on-chain metrics such as daily active addresses, MVRV, and some others. And we may even talk about social volume. And we're going to try and dive right in here as we are going to try to make the most of our hour. I'll be discussing several things for about 20 to 25 minutes. Then I'll hand it over to my colleague Dino, who will be showing some things on his end, including a few recent insights that he's made in some articles. And then we will try and take some questions for you here in the YouTube chat for the remaining 10 to 15 minutes, hopefully. So we'll see how the timing goes. And at any time, Dino or anyone else on our call, feel free to jump in and let me know if you have some further insight you'd like to point out. So for starters, guys, we're looking at our All Santiment project screener. This is publicly available on all of your Sandbase accounts, whether you have a free or pro account. And you can do your, you can basically look at 7 days, you can look at 1 hour, or you can even look at 24 hours. For the purpose of this call, we like to look at what's happened over the past week. And we can clearly see that one coin has sort of stood above the rest, and that was Filecoin. And Filecoin is a kind of a niche coin that isn't discussed often, but because of this push of 150% returns, it's been showing up on our Sandtrends platform, which will show the top 10 assets according to their deviation above their regular mean. So because it's been surging, you can see that 3 hours ago, it was the number 3 token, number 3 over the last 2 hours, and it's currently still number 4. And you can sort of validate that if you just go to Twitter. You can see tons and tons of posts saying anything from, David Gokhshtein saying, I think Phil, I did just disappeared, but he said, I think that Phil is going to be great. I'll explain later without really getting into it too much. There are a lot of people saying, how can I short Filecoin, because they obviously don't believe this will last. And that all sort of, it's something to take into account, because you can see what kind of sentiment is sort of going along with it. Right now, it appears there's a lot of non-believers, but you can clearly see it's shot through the roof with a 134 social volume when it normally rests at, right around 0 or 1. Now, when this typically happens, especially after a surge, we've noted that on average, things tend to decline about 9% over the next 12 days after it enters the top 3 on our emerging trends. And as I just showed, it just hit the top 3 over the last couple hours. So more than likely, after the hype dies down and after the sentiment sort of changes away from everyone universally wanting to short it, that's when you might actually see the price decline. But for now, there's still a bit of a polarization going on between the bulls and the bears, and you'll likely see a lot of volatility. If it was an ERC20, I'd show a little bit more about its daily address activity, but we do have mostly just social volume that we can look at for now for it. So that's Filecoin. As far as anything else, we also have ABBC coin. It's been incredibly volatile over the last month. I won't really go into it too much, and it's not worth taking up too much time. But we do see, ERC20s like Ren. Waves is not an ERC20, but it's doing well as well. And we also have Quant, another ERC20. These 3 all at plus 20% over the last week. So make sure you guys use the screener, very important. Right here at the top, you can either go to a default My Screener, you can find a public one like this. You'll see whether it's private or public. You can always make your own. You can also use filters over here and, decrease the amount of assets that show up by having intervals that, and a metric that is your favorite can fall between, things like that. And it's incredibly useful, so highly recommended. All right, moving on. I would like to also show what the correlation is between Bitcoin and the S&P 500 right now. Now, for those of you who've tuned into previous calls, we've occasionally gone over this, and usually the lower the correlation between crypto, specifically Bitcoin in this case, and the S&P, the better for crypto. Right now, we're actually way up high, and this is looking like it's just under 0.5. I'd call this maybe 45 to 48% correlation. And that tells me that there is still a very high dependency on what crypto is doing compared to what the markets are doing. Whether this is still pandemic related, we can't say for sure, but you can clearly see that right around March, I wish we had smaller hashes here, but right around March is when things really surged, and that's actually when crypto first dropped. Now, just like the S&P, crypto has managed to recover after the first, 3 to 4 weeks after Black Thursday in mid-March. And since that time, we had a temporary dive under zero, but then it surged way back up to about 0.8, which was an all-time high. But still, we're in that 0.45 range, which tells me there's a heavy reliance between crypto and what's happening in the US stock markets / world markets. So it's something to keep an eye on. And we would really be confident in a bull run, if it dove back under zero, because historically, that's where we've seen Bitcoin's correlation to S&P stay between. And you can sort of see it just over these last 5 years. If I averaged all of these together, we'd be right around zero overall. So over zero, a bit scary. It tends to be a little more bearish that way. Not always the case, especially if the S&P is surging and the correlation's high, like it is now. That allows Bitcoin to retain water, so to speak. But if it were to drop down here, that would be more ideal for us. So it's a slightly bearish sign, but not necessarily doom and gloom. Okay, so now I'm going to dive into the daily active addresses for Bitcoin. For those of you who are hoping for an update on our Google Sheets, we apologize, but we are having a few technical difficulties with getting them to work. Some of you pointed this out in our Discord that they're not able to refresh and get divergences like you usually are. But trust me, our devs are fantastic. They're working on it, and we should have everything back to normal, hopefully in the next few hours, if not the next couple of days. Okay, so Bitcoin's daily active addresses, we're looking at the last 6 months right now. You can see that we have had some growth, right? We were at about 850 to 900 for a while back in April, and we actually peaked all the way up to above 1 million. We got up to our high in late September of 1.15 million daily active addresses, but you'll notice around mid-September, we kind of hit a bit of a peak. And it's not exactly sliding, but it's not exactly going up either, despite the fact that price since early September, after that big drop off that caught a lot of people off guard, we've recovered pretty well with price, but DAA, not so much. It's kind of sort of treaded water, not done much in either direction. And as a result, if I were able to show you the DAA divergence chart, we'd see a slightly bearish divergence, because when price goes up and DAA stays the same, it means that the amount of unique addresses transacting on a given network isn't quite keeping up with the newly found price. So as we can see, we've sort of ranged here for a while now around the low 11Ks, and it's either going to stay that way or it may drop down a little bit unless we start seeing an uptick in address activity. Now, of course, there are exceptions, and price can just jump up all of a sudden without this DAA rising. But if that does happen, it would just create a larger bearish divergence that would basically indicate that a profit take would be more justified, not less. So if you do see a jump in price and DAA isn't following, prime time to take profit. Vice versa, if price is falling and DAA was rising for some reason, like we had a little bit right here in mid-June, that would be a sign of a bullish divergence, and then you get something like this happening, right? So it works both ways, but right now it's in the slightly bearish territory according to DAA. Now, Ethereum, on the other hand, we haven't reported this on Twitter, but we probably will today. We had a 2020 high yesterday. Excuse me, it was yesterday, my mistake. So yeah, yesterday we had a high of 532,000 DAA going on Ethereum's network. This was the highest mark we've had for a single day in 2020. And it has come at an interesting time because the DAA for a while was really sliding down. You can see back in early August, it kind of peaked. It actually hit its high in late July before really plummeting despite price going down. And that's exactly what I'm talking about. When DAA goes down, price goes up. We have a bearish divergence, and that's when it dropped off a cliff, right? Since that time, it kind of has ranged in the 300s, and it peaked up here in mid-September before really falling back down again. And it started to make an attempted rise, and it apparently just broke through yesterday, but price hasn't reacted to it at all yet. Now, I would be cautious of this because in my experience, and for those of you who have used the DAA divergence model, we see the best results when there are bunches of days like this, many consecutive days where it's higher than it has been for a long time, right? And one single DAA candle isn't going to suddenly make a difference. But considering it's a 2020 high, and considering it sort of has come at a time where DAA has started to recover a bit, I'd say this is a pretty encouraging sign. And now what we're going to want to look at is what happens today. And even though the DAA doesn't really give much info until the market close happens, we can still look at the intraday mark, which we can do here. If we go to the 24-hour active address bars, we can see that it's still looking quite high right now on the 16th. And I'll zoom in just a little we'll go to the last month. You can see that it's hovering. It's not just one specific hour that caused it. It's hovering at this very high mark right now. And I would be heavily encouraged by this, especially if it continues into, the end of the S&P close for the week, which will be happening in about 5.5 to 6 hours. If this stays up after that market close, that means that it's not really related to any sort of S&P correlation, and it's doing an independent kind of bullish formation right now. So I want us to all really take a look at this chart for the day. You'll have a link up on Twitter soon that you guys can check out for yourself. But I highly recommend you check out this new intraday address activity that we have been showing off for the last few weeks here.
Hey, Brian.
Yeah.
You might want to also show the transaction volume for Ethereum and put it in a daily interval, although not as prominent as this latest spike in daily active addresses. There has been a notable sort of uptick in the actual amount of coins being transferred on the Ethereum network as well. So that's, in general tends to be a good sign. It has dipped a little bit yesterday, but the day before it was relatively high. I think the highest in about 2 or 3 weeks. So moving forward, I think it's going to be, it's still fairly early to say either way. But if this proves to be a sustainable spike in both the daily active addresses and on-chain transaction volume, it provides more leeway for Ethereum, I think, to kind of relatively decouple from whatever Bitcoin is doing, because at the moment, Bitcoin is still very much kind of tied to the S&P and the general sort of traditional markets and global financial markets and the volatility that comes with it. So the higher Ethereum's own on-chain activity is, the more likely it is that it's going to be able to resist whatever gravitational pull Bitcoin has on it. Now, one of the reasons why I think we've been seeing an uptick, and we mentioned this last week, we've been seeing an uptick in Ethereum's daily active addresses are the fees, right? So in the past 24 hours, the average fee for interacting with the Ethereum network has been $1.72. So I think this is the lowest it's been since like late July. We've essentially gone back from these massive spikes in Ethereum fees throughout the August and September months, and we are now starting slowly to normalize back to pre-DeFi levels. We're not there yet. 1.7 is still fairly high compared to what you paid for an average transaction maybe back in February of 2020. Yeah, but if we continue to drop, and if L2 solutions keep getting used by more and more exchanges and more people, this could all bode relatively well for Ethereum in the midterm. It's early to say, but these are some promising signs for Ethereum's performance moving forward.
Yeah, this is a great point, Dino. And I'm curious, just for comparison, do you remember exactly what the average fee was like around late September when it was peaking? I
Oh,
was hearing numbers of like 7 or something.
yeah, I can share my screen really quickly and show that.
Yeah.
One sec. I have it open. So select screen, allow. All right, so here we're looking at the fees, the daily average fees on Ethereum in USDs. So here's the average fee in February, right? Very small, 0.1, 0.2. So we're nowhere near these levels. However, we are near these sort of, like I said, late July is where we are at the moment, sort of these types of moves. Now, I think this was the, if I'm not mistaken, the sushi launch or the sushi peaks. So at this point in time, the average fee was almost $15, which
And
is
that was right when the markets plummeted, by the way. It's worth noting,
indeed,
right?
you can
Second, third.
you can plot this yeah, against the price of Ethereum and kind of see that the fees sort of obstructed the growth of Ethereum any further, because there was not enough of, not a lot of people were using the platform, the network. Pretty much the exorbitant fees sort of priced out any sort of a small return interactions with the network. And so once we kind of started to normalize, we started recovering, and then we see this sort of rising inverse correlation between the fees going down and the price of Ethereum starting to recover. It's still too early to say. I still think 1.7 is too high for just, if we're moving forward, these levels of fees are not going to incentivize a whole lot of small transactions, which I think Ethereum needs to go higher. So we still need to go back to pre like May levels. But we're getting there. We're slowly, trucking along. So hopefully, this is a trend that continues in the days to come. And yeah, so far so good. So
Yeah. Thanks,
giving
Dino.
it back to
That's
you.
for sure. That's really a great graph because you could see on each one of those spikes there was a immediate, if not just a couple days later, drop in price. So a very obvious correlation there. And of course, it's still reliant a bit on Bitcoin and the rest of the crypto markets. But I think that's a really good thing to be tracking right now, especially if you're a big Ethereum bull. All right. So I'm going to go over to, you guys can see my screen, right? I presume so. Just let me know if you can. So this was a tweet of a recent upgrade we made about our MVRV Sandsheets model. Now we have this graph here for 7 days, 30 days, 90 days, and I think it was 7 days, 30 days, 180 days, and 365 days. So 4 different key time intervals that a lot of the market fluctuates around and sort of has their mood dictated by. Obviously, the 7 and 30 are a bit on the shorter term, whereas 6 months and 12 months are good key longer term intervals that a lot of people trade around. And right now, what we're looking at is probably the one we deem the most valuable overall because it's a decent hybrid of both short term and long term average trade returns. Now, keep in mind, this isn't just overall price returns, this is what the average trader returns are based on the amount of FUD and FOMO and all of the day trading and hodling all combined to give us an accurate depiction of what people's actual percentage returns were over the last 30 days. And we had a pretty even split. This was about 2 or 3 days ago I posted. Yeah, 2 days ago. So it's still pretty accurate. Might have shifted just slightly. I'll show that Sandsheets model likely next week in more detail to show how it works. But for now, I can show you what it was outputting a couple days ago. And it was telling us that we had a pretty even split of undervalued versus overvalued assets. And this actually at the time was showing that Bitcoin, where was it? Where was it? There it is. Yeah, both Bitcoin and Ethereum were a little bit over the 0% mark. Now, 0% is right around the historical average for all MVRVs, regardless of time frame. And if you are over it, in other words, if the average trader return is over it, it means that they are slightly in the green, and therefore the overall markets are slightly overinflated because it's a zero-sum game. So with Bitcoin and Ethereum both above, I believe that the price at this time was around 11.5 or so, and it's now around 11.35. Haven't checked the charts in about an hour, so don't hate me if things have changed. But right now, it's basically evidence that this Bitcoin percentage here was in fact overinflated, and it's probably right back at around zero right now. I'll actually check that in a moment to see how accurate it is. But the point of this is you can see which ones are underwater, therefore have the least risk to them if you were to buy into them right now, versus overwater if you were to buy into them now. Obviously, Ren, Binance Coin have done extremely well. It doesn't mean that they can't continue a surge and a decoupling, especially if they have good fundamental backing and a good long-term trajectory. But there still would need to be some event to get, good coins to drop down to average trader returns of 0% over a 30-day span in order to really justify a good buy opportunity. So this kind of model is a really fantastic way to directly compare assets over time and find at any given point which ones are the best opportunities to buy and sell. Now, I posted at the beginning of the week an article about this, and it featured kind of a comparison of talking about different time intervals and how having them universally above zero or universally below zero can really give you the best indication of a confident buy or a confident sell opportunity. Now, we talked about Dino's. This was a screenshot from one of Dino's articles where he highlighted key moments where Ethereum's MVRV for that 30-day time frame was well above zero, and for most purposes for the 30-day MVRV for any asset, anything above about 20% is really considered a danger zone, and you can really see how well aligned all of the price drops happened anytime it went above that 20% mark, right? Boom, 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 literally all of these. So that's just 30-day, but imagine if the 7, 30, 90, 180, and 365-day MVRV were all showing danger zones simultaneously. That's when you really get the best results of a very confident drop for assets that may not be as reliable as Ethereum's here. So I highlighted a few moments over time. For example, late July, we had an MVRV. You can barely see the crosshair here, but we had an MVRV where they were mostly above 1. This means that they're above 0%. And I think since this article was published just in the last day or two, the devs updated to make this a percentage instead of 1.xx. So you'll see it as +% or -% from here on out. But right now, for the purpose of this chart, it's showing mostly things were above, but not quite in the danger zone. 30-day, for example, it's at +16%. That's not quite in the +20% range. And you can actually see in the 1 day, it was a little bit below at about -1%. That meant that it wasn't quite a purely confident sell point like the one was down here, where we had the 30-day at +33%, which is way in the danger zone. 1 day, just 1 day, the average returns were +6%, which is quite a bit. 7 days, +16%. These are basically all universally in the danger zone. And it happened basically right before this local top happened about a day later. Now, it wasn't perfect by any means, but it's an example that I think is really important to indicate that a local top was forming, because even after this day occurred, it basically just ranged right around this 350-ish area until you saw all of these MVRVs really drop down. And I think it's a really good educational sort of model that can help you use MVRV to your advantage. And once we have that MVRV sand sheets model back up, you can really see how these will align together and provide the most best optimal buy and sell opportunities for you to identify quickly. Okay, so that's all for MVRV. Oh, I did want to show really quick just where we're at right now. So as you can see, these have changed to percentages, like I said, just in the last day or two. Our wonderful devs updated that. But you can see as of right now, we are universally above zero for all 5 of these key MVRV timeframes. Nothing in the danger zone really. As you can see, that 30-day one at about plus 4.8%, not that scary, but it is slightly bearish because all 5 of these are above zero right now. So keep that in mind, and you can explore this yourself for any asset, especially if you're a Sandbase Pro member. You'll see everything in real time, so keep that in mind. I'm going to leave this alone for now. Dino, I don't know if you're planning on getting into it, but for time's sake, I'm just not going to.
Yeah, I was gonna talk a little bit about it, but we can do that in a minute. Yep.
Yeah, no problem. A couple more things I want to touch on. As many of you know, there was a transfer of all Lend tokens on Binance earlier this week, and they were converted to AAVE. AAVE is the new token that is now being used as a secondary asset. Most people believe that Lend will eventually sort of cease to exist and eventually be pulled from markets, but for now it still exists in tandem with AAVE. And right now you can really see what the transfer over to AAVE did from the biggest, when it happens on the biggest exchange in the world. There was a sudden price drop that quickly resolved itself. This was likely due to the fact that trading was just impossible at this time. And it quickly actually recovered. And afterwards, Lend went higher, and this was around the optimal point to sell. It jumped maybe 6%, something modest, but you can see that with the new coin, there's been a very, very harsh sell-off. However, there are some encouraging things going on with volume where it's been climbing over the last couple days. Let me see if I can make that intraday. Let's do just 1 hour. Yeah, so it's actually climbed pretty steadily hour by hour since the transfer was made. And I think there actually might be some encouraging signs here as a buy opportunity. Right now, AAVE isn't really being talked about that much, and it could indicate that there's going to be some upcoming FUD when you have something like this with a rising volume. Also, address activity, if you can sort of see through the white. Let me just take off volume here. Address activity has been declining a little, but it's not really in a threat to just fall off a cliff the way Lens has ever since the transfer was made, right? It's an absolute fraction compared to what it was right before. So keep that in mind, and I would really advise for any Lend or AAVE holders right now to track this chart in particular. We tweeted about it a couple days ago. A new model that I'll probably show off more next week when we have access again is our highest transactions per asset comparison model. And this is basically going to show what the highest transfers over the last 90 days were for any asset that we track, ERC20 wise in particular. You can see that for Lend, these were the two huge transfers. We had a 78.4 million exchange to exchange transfer, and then a 98 million offline to offline address transfer, and then exchange to wallet to offline wallet transfer to conclude these 3 huge transfers on these 2 days. We also had a major fetch transfer because they had an update to their protocol just 2 days ago. And I want to actually show that really quick to show exactly how big that transaction volume spike was when that occurred. It was the largest spike that we've seen in 2 years. So that was pretty massive. And actually, if I were to zoom in to, let me see if I can do just the last day. Yeah, there actually was a pretty huge spike in my early morning hours, depending where you are in the world, but about two and a half hours ago, there was a pretty big spike. And it actually looks like this could be a decent opportunity. I haven't even looked at the address activity, but if there's a correlation upward, yes. Yeah, so this looks bullish to me right now for those who may be interested in fetch. After that big token transfer, there seems to have been a pretty big increase in address activity during that time. Now, obviously, the biggest one happened right before this transfer, but I like that the rise is starting to happen, and it's at least getting back to normalization. and you can see just how much price has been suppressed. So it could be at the very least, a short-term opportunity here. Okay, so that's a few altcoins. Last thing I'll show here is just the ebbing and flowing of top versus bottom mentionings on various crypto platforms. Right now, we're mostly seeing a pretty neutral long versus or top versus bottom ratio. As you can see, when short really starts to become the dominant topic of discussion compared to long, that's when you have the heaviest polarization. Now, they're not always right. We saw that people were actually quite right here in mid-September when price topped out at 11.1 temporarily. But then when it gets really low, like right here, and long starts to hit, it can also go either way. So long was the dominant presence here, price went up, but long was also the dominant presence here and price went down. But long story short, you'll want to look at how long and short are ebbing and flowing because they are going to be price directional changes. So if you were to see this red come up all of a sudden, where short is the dominating presence in mid-August, that's whatever the initial movement is, it's likely going to be validation that that movement is going to happen in a pretty major manner compared to usual, right? So anytime you see a big spike for either long or short, and then you see a subsequent move over the next day or so, that move will likely be a larger than average move. That's basically the best way to read this graph. And I'd be happy to go into this in more detail with anyone who has some follow-up questions about it. I'm going to wrap up my segment here. I want to make sure Dino has enough time, but I'll see if I can touch on a few questions at the end of our call here, guys. Thank you very much.
Thanks, Brian. All right. So in the meantime, guys, I'm gonna talk about a few things, but not gonna draw on for too long. Want to get questions from the chat as well. So any sort of coins that you're interested in, coins that you might think are priming for either a pump or a correction, and want to let us know so that we can do some quick analysis on it, type in chat. So Amit, I see your question about the transaction table. I have the, oh, I'm not presenting yet, one sec. I have the FET's top transaction table open, so let's get to that in a second. Before that, however, I still wanted to talk briefly about Ethereum and Bitcoin because we haven't really touched on social data, and I think it's been quite interesting over the past couple of days in particular. So, okay, so zoom in or full screening my chart. So here we're looking at the Ethereum weighted social sentiment for the last 2 years. Essentially what we're looking at here is the average sentiment on crypto Twitter in particular, although you can on our platform change the different social channels. So currently we're looking at the average sentiment towards Ethereum on crypto related Twitter accounts. And one of the things that I mentioned recently is that this spike has seemed fairly concerning to me. So if you look at historical trends, extremely bullish sentiment was never really a good friend for cryptocurrencies. This is for Ethereum, but the same applies, and I'll show it in a minute, the same applies for Bitcoin as well. So when we see these sort of massive rises and growth in the average mood towards a particular coin, it usually points to times where the people are approaching peak hype, and the coin is getting irrationally, the market is getting irrationally confident about the coin's near term and sometimes even mid-term potential, which usually drives the price down in the immediate aftermath. So the positive thing for Ethereum, let me zoom in a little bit, is that we've had a relatively quick nosedive from this bullish sentiment over the past 7 days, and we are now relatively comfortably back into the bearish territory. So if we really are, hopeful of another push upward, which I know a lot of people are not, we do want to see this continue to drop into this sort of minus 0.7, 0.8. This is the sort of standard deviation from the mean. So the higher that we go, or the lower that we go, the more bearish average sentiment towards Ethereum is. And if you look at historical trends, let me try and manipulate this chart. There we go. Very often, in the past 2 years at least, it's been these sort of massively bearish undertones that have helped Ethereum bounce back. So we've had it here, we've had it once again here in January 2020, we've had it obviously after the Black Thursday dump, and we've also had it here during Ethereum's consolidation period before the rise. So we do want to see this continue to drop. Another reason why I wanted to look at sentiment is Bitcoin sentiment, which has also shown us relatively optimistic signs. As soon as this loads, there we go. So for Bitcoin in particular, we were actually moving just into bullish sentiment over the past couple of days before dropping back below in the I think the last 2 or 3 days in particular. So again, if you look at historical trends, very bullish sentiment towards Bitcoin has rarely been a friend to it and has usually sort of coincided with upcoming price correction. So what we definitely want to see, and we can kind of see how this sort of drop in bearish sentiment has led to or has coincided with the move above 11K for the first time in I think like 3 months, actually 2 months. But this sort of particular drop off in sentiment towards Bitcoin as well is something that I think should be kept an eye on. It's still relatively low. But as we continue to drop here, up to here, I think we might see more fundamental support for a sustained rally. So this is another thing to, to keep an eye on. Okay, 2 more things for Ethereum that I thought were quite interesting to show. Number one, so I don't know how many people use this chart, but you should definitely use it more if you're not already. So on Ethereum's or any coin's chart, you can go to holders distribution, combined balance. And what this particular chart is showing is the amount of Ethereum held by addresses holding between 100 to 1,000 and 1,000 to 10,000 Ethereum. So the way that you can do that is you can go click on merge, click these 2 categories, basically looking at sort of mid to large sized Ethereum whales or Ethereum holders, and look at their sort of average holdings or actually combined holdings over time. So one of the things that I've noticed, especially over the past couple of months, is that even though in general the total amount of Ethereum held by these addresses has been declining, which makes sense because a lot of people have been kind of moving their bags to different DeFi protocols to make their money work for them a little bit harder and gain some passive income. However, we've also seen, despite this drop off, which coincides with the proliferation of DeFi protocols, we've seen several spikes. And lo and behold, most of these spikes come at local bottoms, which points to the fact that these sort of midterm to semi-large players for Ethereum tend to stock up on some Ethereum over at local bottom. So it happened here in August, happened very clearly during the September 6th bottom, happened once again during this October 9th bottom, actually October 7th and October 8th bottom. And in the past couple of days, we have once again sort of seen this particular group of holders start to accumulate a little bit of Bitcoin. So these are percentage based, so percent of the total supply of Ethereum. We can actually go to absolute and see exactly how much Ethereum this is. So let's do the same thing. Merge 100 to 1,000 and addresses holding 1,000 to 10,000 Ethereum. So let's see. So we went from 27.8 million Ethereum just 3 days ago to 20. Let's zoom in a bit so I can see it clearly. There we go. So 27.8, now 27.95, I believe, unless I can. Oh, 28.6. Okay, so this is about what 200,000 Ethereum or so being added by mid-term or mid-range Ethereum holders over the past 3 days, 4 days now, in particular. Relatively hopeful sign, especially if we look at Ethereum miners, another sort of strong stakeholder for Ethereum. And let's plot the price of Ethereum as well. We can see that in general, they have not been really selling off their bags. So we're looking at the combined balance of all Ethereum miners over the last, I think this is 6 months. So we've been seeing this sort of sell-off during this Ethereum rally and then a subsequent crash. Since then, however, they have been keeping their block rewards a lot more closely to their heart. So unless we're seeing another drop off here, these are some of the more positive signs. They make me a little bit more optimistic about Ethereum's short-term price performance. Lastly, I was playing around with some of our charts for Ethereum, and I was looking at Ethereum's funding rate on BitMEX. So basically what you're seeing here, anytime that you see this line go above zero, that means that on average, longs are paying shorts on BitMEX for Ethereum in particular. And then anytime that we see these sort of journeys into the negative territory, that means that shorts are paying longs, and on average, the market is relatively bearish towards Ethereum. So I've noticed that there have only been, for Ethereum in particular, there have only been a few times where the general investor sentiment on BitMEX went below zero, basically turned bearish. And every time so far, it has seemed to be a relatively good opportunity to accumulate into Ethereum. So we see this sort of journey into negative territory at a local bottom here on October 25th. Once again, very shortly on December 21st, a massive drop off in Ethereum's funding rate during the Black Thursday dump, which obviously was a pretty good opportunity to accumulate ETH. Once again here in sort of the interim of the Black Thursday crash. And then more recently, although it's relatively small, you can still see that the last two times that we've seen the shorts paying longs for Ethereum, or basically the average sentiment towards Ethereum on BitMEX moving into bearish, has coincided with short-term tops and bounce back. So keep an eye on this chart moving forward. I think there might be some alpha to be extracted from it. Obviously, it's you need to take into account other fundamentals as well before making any sort of decisions. I just thought it was an interesting sort of interesting chart that I wanted to show that we don't really show all that much in these calls. Okay, so I'm going to talk a little bit about the upcoming weekly pro report, which is available to all Sandbase Pro subscribers. And then in the meantime, guys, any questions for any specific coins, let us know in the chat. I think I've seen somebody asking about Uni. Is Max on the call? Max, are you on the call? Okay, he's not. Okay, I'll talk about Uni then. Max is our resident Uni hopeful because he still hasn't sold his Uni. But yeah, we have a bunch of data on Uniswap, so we'll talk about it in a second. Before that, just briefly, every week we publish a pro report available to all Sandbase Pro subscribers. So if you want a Sandbase Pro subscription, you can sign up for free for 2 weeks, check out everything that's available on our platform, see if it's as powerful as we think it is. And then from then on, it's just $49 a month, and you get access to all of the metrics, real-time data, as well as daily market insights and weekly pro insights as well. So this week we are talking about whether and how much token fundamentals matter in 2020. So we have decided to test a very simple methodology, or do a very simple backtest, where we looked at all of the ERC20 projects that have a relatively high network activity, call them fundamentally sound, right? So we have isolated out of over 1,100 coins, ERC20 coins that we have in our database, we have isolated about 250 coins that fit these three criteria. So they have a market cap above 1 million. Their number of daily active addresses is above 20, which means that they're not entirely dead as a network. There is actually some amount of address activity. Some users are, in fact, utilizing their coins, even if it's just for speculative purposes. There is some sort of on-chain activity actually occurring on the network. And then the average on-chain transaction volume in USD is above 100,000, meaning that at least there is a certain amount of actual value being transferred on these networks on a daily basis. So we wanted to see how a portfolio built of these types of projects, so projects that have at least some sort of network activity, some semblance of fundamental activity on their networks, how that would perform compared to two benchmarks. One benchmark is holding Bitcoin over the same time frame, and then the second benchmark is holding Ethereum, right? Because we are indeed talking about Ethereum-based coins. So we've done two tests. The first test looks at the 2-year span. So our starting point is October 15, 2018 until present day. And the second test is October 15, 2019, so a year ago until present day. What we are doing, in fact, is we are taking all of the projects that fit these three criteria, and we are rebalancing this portfolio monthly to eliminate hindsight bias, right? So every month we look at the projects that fit these criteria. We sell any projects at the end of the month that don't, and we buy into all of the projects that do. So 2 years ago until now, this is the performance of our portfolio compared to Ethereum and Bitcoin. So you can see that at the very at this particular point in time, it's basically neck and neck with Ethereum and Bitcoin in terms of returns. It's actually it underperforms just slightly. And in general, you can see that the 2019 wasn't the greatest year for this particular portfolio. It has in general kept close or mirrored movements of Bitcoin, but it was not able to maintain the same sort of scope or size or power in its moves. So this fits perfectly with the time that Ethereum's market cap dominance was the highest in, I think, about 2 years. It ranged between 68 and 72% of the entire cryptocurrency market cap, meaning that pretty much everything was dependent on Bitcoin and Bitcoin's moves, therefore not really allowing these fundamental coins or fundamentally sound coins to chart their own path forward. However, what we've been seeing in the past couple of months, and especially since the Black Thursday crash onwards, and with the DeFi proliferation, is we've seen a growing decoupling from this particular portfolio and both Bitcoin and Ethereum. So between May and July here, while both Bitcoin and Ethereum were kind of just ranging and doing a whole bunch of nothing, this particular portfolio of coins that have some sort of network activity and some amount of value being transferred on their networks has made almost a 2x in this particular 2-month time. And then since then, we've made up a lot of lost ground that we've had during the 2019 era, and are now pretty much neck and neck with both Bitcoin and Ethereum. Now, if we zoom in and if we take a starting point of 2019 October, so basically 1 year ago, we can see here exactly how strongly our portfolio of fundamentally sound projects actually performs in the recent terms. So not only does it beat both Bitcoin and Ethereum, it does that quite easily. So Bitcoin's returns in the past year would have been about 40%. Holding Ethereum would have netted you about 120%, whereas this particular strategy or this particular portfolio would have netted about plus 170% in profit. Obviously, this does not include fees that you would have to pay if you were monthly rebalancing this portfolio, but just in general, you can kind of see not just the strength of the move, but also this growing decoupling between coins that have some semblance of network activity and Bitcoin and Ethereum. And we believe that this is probably going to keep happening in the future. The more that sort of Bitcoin loses its market cap dominance, and the more that market realizes that coins that actually have some sort of utility and there is some semblance of fundamental network reliability and utility, these coins we think are going to be able to decouple from Bitcoin and Ethereum more, chart their own path forward. And that's why we think, looking at these fundamentals that we do on these weekly calls and in our daily insights is becoming more and more important for making viable investment decisions. So there's a lot more to this insight that I haven't covered yet. So if you want to read the whole thing, subscribe to our, to Sandbase Pro, and you should be able to get the report maybe in 2 hours from now directly to your email address. All right. So with that in mind, let's look at a few coins that we had questions for. So
ZRX is one of them, Dino.
Oh, I love it. Okay. Let's look at ZRX. I mean, I was just recently looking at ZeroX for a different reason. I'm writing an article on age consumed, which is basically a metric that tracks the activity of previously dormant coins. And we think that in general, age consumed can be a very sort of reliable volatility indicator. So rather than being a bottom or a top indicator, age consumed in particular just tells us that long-term holders are starting to move their bags. And whenever you see long-term holders starting to move their bags, it could be a good time to reconsider your position. And it usually points to change in trends. So for some reason, let's see. I can't seem to find age consumed. Is it bugged? One sec. If it's bugged, I'll just look at it on SandData. Give me 1 sec. Okay, network activity. Give me age consumed. Okay, Brian, let me know if you have it on your end. In the meantime, I'm just going to show it on SandData.
Yeah, I'll check.
Data.santiment.net. This is our sandbox, guys. So I'll go 0x. Token consumption. And we've got token age consumed. Okay.
I just set it on chat.
Okay, let's see if this works.
Huh, it just doesn't open on your end.
Yeah, it just doesn't
Try
open.
giving a hard refresh if you want.
Yeah, it just did, but it doesn't really help it. Maybe if you want to share your screen, Brian, but in the meantime, I will show sort of these spikes in 0x's age consumed, very often sort of coinciding with interesting points in its life cycle. So let's zoom into the last year just so you can see it a bit more clearly. So we've had spikes in age consumed at local tops as well as all-time high tops here in early July as well as here in mid-August, pointing to the fact that long-term holders are starting to move their bags on-chain. And when you see this type of activity, especially during a price rally, and when you see a coinciding spike in the amount of 0x being moved to exchanges, you can pretty sure bet that some long-term holders, maybe even ICO investors, are looking to take some profit. And then on the other hand, we've also seen quite often these sort of spikes in age consumed coincide with upcoming price rallies as well. So we've seen this in late July as well as in late June. So both these spikes kind of starting at the beginning of 0x's rallies. And then here, it seems like there's been another sort of point of sell-offs as 0x started to drop below 0.5. There has been another sort of major spike in 0x's age consumed, meaning that long-term holders were starting to move their bags, I would assume, to take some profit or sell because they were worried about its short-term potential, which drew the price down even more. So now let's look at 0x and what it's currently doing, right? Let's start with social data. Oh, okay. Yeah, I can see why I'm not, for some reason I'm logged out. Brian, do you want to share your screen while I log back in? It seems like for some reason I got logged out of my account. One sec.
Yeah, no worries.
Yeah, okay. Okay. In the meantime, you might want to show 0x's social sentiment on graphs.sentiment account while I do my things.
Okay, I'll do that in a sec too. So yeah, guys, this is, as Dino mentioned, this is the token age consumed. This was the massive spike that occurred just a couple days ago. And let me zoom out a little bit more to give you a little more perspective. You can see that more or less the ebbs and flows of 0x are sort of following the address activity. You can see, especially over the last week or so, we've had this. Hey, Dino, if you don't mind muting really quick.
Mm-hmm.
Yeah, we've had this spike here that correlated with its largest address activity since late September. When the late September spike hit, you can see that price was not following it. But because of this large spike that was something like a 3 or 6 month high, it allowed for a bullish divergence to form. And that's why the spike subsequently happened a couple days after. And that's what we look for and why daily active address is such a great leading indicator. Now, moving on to social sentiment, as Dino recommended. Get over to 0x. And we're going to look at Twitter, as Twitter is our largest of the 5 or 6 databases that we sort of follow. We're mostly still in negative territory, which is a good sign. Generally, when the crowd is negative, that's when prices are going to turn positive most frequently. You can see here as evidence, it bottomed out when we were most negative. Here, it sort of slid down a little more, but eventually it started to climb until we got super positive, and then a few days later, it topped out. So as you can see right now, we're still in the negative territory, and we've been kind of in that range for a while. But you look at the previous long stretches of negativity for more than a month, like here and here. In both cases, prices kind of bottomed out and eventually turned positive, and it stayed that way until weighted social sentiment followed and became positive itself. So generally a slightly good sign here to see that Twitter's social sentiment is negative. We could even look at something like Telegram, compare it to that. Yeah, kind of the same boat, still slightly negative. We can look at Reddit. I'm not sure how much Reddit talk there is on ZRX. Yeah, I would guess very little. It is slightly on the positive side, but as you can see, much less correlation here just because of the lack of chatter compared to what you see on Twitter. But yeah, if you have a Sandbase Pro account, guys, definitely use this platform, graphs.santiment.net/social. We use it all the time to come up with insights and sort of dive into what's going on with Bitcoin, Ethereum, as well as smaller assets. And we generally go to Twitter as it's the most reliable and has the most data on average on a day in, day out basis. How's everything going on your end?
Yeah, for some reason it's not showing a few of our metrics. So let's just look at your screen and start with 0x's 30-day and 365-day MVRV, just to see where we are in sort of the midterm cycle for 0x. So basically what Brian is going to show now is the average profit or loss of all addresses that have acquired 0x in the past 30 days. Oh, it seems like it's on your end bugging as well, right?
Yeah, let me try to give it a hard refresh on my end.
You know what? We can just something seems to be updating on the main platform. So let me just use our sandbox and look at everything there. It's easier that way anyway. Okay, I'm gonna share my screen, Brian.
Got it.
Okay, 0x. Let's look at the MVRVs. So this is what our sandbox looks like, guys. It's quite a list of pretty colors. So what I want to look at is the 30-day MVRV for 0x. Let me zoom in a little bit. So this particular chart tells us what is the average profit or an average loss of all addresses that have acquired 0x in the past 30 days. So at the moment, we see that it's about minus 0.19 or around minus 0.2% in loss on average that short-term 0x holders are. And you can kind of guess that just based on 0x's short-term price action here. So as a general rule of thumb, why is MVRV important? The higher the MVRV, generally speaking, the more incentive there is to sell. Because let's say, for example, here or here, right? Short-term holders were here, they were about 46% in profit, which made it very difficult for a lot of weekends to continue hodling and not cash in on their initial investment. And that's exactly what happened. And so you can already kind of see that there have been sort of historical danger zones in terms of MVRV, where in this case, short-term 0x holders start offloading some of their bags. So anything above 20% here, we're already starting to enter a danger zone. Sometimes at this particular point, I think it was an outlier just because of how quickly this went from, what is it, like 3% to 46% in maybe 2 days. So a lot of holders didn't even have time to sell in this particular case. And that's why I think it went a bit higher than usual. But in general, between 20 to maybe 35%, I would say, is a danger zone where we see short-term 0x holders start offloading some of their bags and their profit margins start to peak before we have another correction. And then on the other hand, when we see these drop-offs in 0x's average loss in this case, the lower that we go, some market analysts believe the more opportune it is time to accumulate that particular coin, meaning that on average, according to this metric, the network is undervalued by quite a bit because the holders are losing based on their initial investment. They're losing quite a bit of money. So there's not a lot of selling pressure. Nobody's gonna sell at these particular points in time. Why would they? So it allows for a more robust price recovery as well. So you can also see that in general there are sort of bounce back zones for 0x as well. So anywhere between minus 20% to minus 40%. I think actually between like minus 20 and minus 30%. This is a Black Thursday crash, so obviously it's sort of a black swan event. Usually we seem to bottom out at between like minus 25 to, what was it here? So you can see like minus 30 here. Let's ignore this one. Minus 25 here, minus 25 here. It was a bit higher here, minus 29. So between like 25 and 30% in minus, when you see this sort of moves or sort of average loss on the initial investment by short-term holders, it can be a good time to accumulate. Now, currently, we're just below break even in terms of short-term holders MVRV ratio, meaning that on average, let's say that 0x holders are currently sort of break even on their initial investment. There's not a whole lot of reason why you would want to sell at this particular junction in time, and that's why you don't usually see MVRV kind of stick for much longer in this particular range. So we're still ways away from a, so to speak, danger zone for 0x's short-term holders, which is good in itself. Like if other fundamentals concur, and if they let us know that there is some reason to be optimistic about 0x's performance moving forward, the MVRV ratio seems to be on its side, at least for another like 20 percentage points. So this is as far as short-term holders are concerned. The long-term holders, on the other hand, let me first of all change the color. Okay. And let me, yeah, there we go. So this is what we're seeing as far as the long-term 0x holders are concerned. So they are currently about 7% up on their initial investment. So here we can also see sort of historical bottoms, slightly lower at about minus 45%. This is obviously during the Black Thursday crash. But in general, over the past 6 months in particular, as the DeFi summer started to really blossom, we saw this sort of all-time highs in the 0x's MVRV ratio as long-term holders kind of started really, making massive gains on their initial investments. Good for them. And it peaked at around 94%. So the long-term 0x holders were about plus 94% on their initial investment before starting to sell off some of their bags, take profit, which drew the price down. Now, currently we're still relatively low. We're above break even. So as if 0x starts breaking out once more, we are going to see this MVRV ratio start to climb to these sort of levels of 20 to 30 to 50%. If we do, this could once again be a relatively dangerous sign. At the moment though, both short-term and long-term MVRV ratio tells us that we're not really at historical points in time where either short-term guys or new holders or long-term investors in 0x have looked to offload their bags. So keep an eye on this moving forward. For now, we're not in a danger zone, so to speak. Let's see at the address. Look at the address activity for 0x. Okay, so I think if we really want to see, and actually we can look at the intraday metric here. Maybe that's better. If we want to see 0x or any really coin start to make a sustained push forward, we're going to need to see some sort of help from its fundamental activity. And in this particular case, I'm talking about its daily active addresses. So let's look at the last 6 months of 0x's activity and compare it to its price. One sec. Oh wait, this is, yeah, I need a bit of a higher time frame. I think this is the last like 7 days or something. What you're going to see, I think, is you're going to see two major spikes in 0x's daily active addresses during like the all-time price high, and since then we haven't really recovered. Like we've dropped back fairly severely. Maybe if I do this instead. I mean, I can show it here as well. Okay, let me just show it here. So this is the rolling 24-hour addresses for active addresses for 0x. As you can see here, we've had this massive sort of high peaks in 0x's daily active addresses. This spike obviously coincides with the rising sell pressure and people moving their coins to exchanges. The way that you can make sure that this is the case is by looking at a few different metrics as well. So for example, right, if you see these types of spikes in daily active addresses, while generally a spike in daily active addresses is good because it shows that the network is being utilized more, it also depends, or it's very important to figure out where this sort of rise in network activity is coming from. from. So one of the ways that you can figure that out is by looking at daily active deposits. These are addresses that are being used to move 0x to centralized exchange wallets. So you can see a coinciding spike during both of its tops here, both in May and August, pointing to the fact that in general, this spike in daily active addresses was mostly driven by speculative demand, or actually users looking to sell their 0x and take short-term profits. Since then, however, we haven't really been able to recover in terms of on-chain activity. Like, overall, the network activity is still relatively high to other ERC20 coins. Like 820 addresses a day, it's pretty good. I'm not gonna lie. Like, let's see. Yeah, 820. So for example, just to put it in perspective, you can go to our screener, right? And you can look at all of the ERC20 coins, which you can do so like this as soon as it loads. Market segments. I'm gonna look at Ethereum or all Ethereum-based coins. Just let's wait a bit until it loads. Sorry, guys. Yeah, I think we've been having some database issues in the past couple of days, so some of the parts of the platform are a bit buggy. So anyway, now I'm looking at over 1,000 different ERC20 coins. If I want to see how many of these coins have had more than 800 addresses, 800 addresses in the past day, that's 15, right? This is not a very long list of coins. So the fact that 0x is in sort of this company, at least in the past 24 hours, usually it's a bit lower, about 600 to 700. Let's see. So 700 coins, 700 addresses. It's 17 different coins. Why isn't 0x here though? Let's see. Where are you, 0x? Trying to figure out. Okay, one sec. There we go. Okay, 0x. It seems like the average is actually more close to 500 than 700 here. The average, these ebbs and flows make it seem a bit higher than usual. Still, if we're in the top 30 assets by network activity, 0x is one of them. That's still good. However, what we really want to see is, if we want to see a more sustainable push upward for 0x, is we want to see something similar to what Ren's been doing. Bam. All right, this is what I want to see for a particular coin for at a particular point in time. Now, yeah, we're also going to see some corrections as the average profit of holders becomes higher, and we see some short-term sell-offs. But in general, this sort of rise in daily activity on the network is very optimistic for its midterm potential. So you can see, Ren going from about 500 daily active addresses to 1,300 to 2,200. So obviously, this is kind of this particular spike has been also led by some speculative activity for sure. So it's probably not a good reflection of its average network activity. But if it can stay in these levels already, we're kind of we're going in the good direction. So 0x at the moment is kind of just threading water. So I would like its network activity in terms of both addresses and transaction volume, or the actual amount of value being transferred on the network. I would like it to show signs of a bounce back. Actually, the transaction volume is moving in the right direction in the past couple of days. So let's, if we zoom out of this spike, yeah, not bad. This is the 8-hour interval. Let's look at a daily one. Okay, so yeah, this seems to be maybe driven by this local top and people looking to sell before a correction. So if we take that out of the equation, it seems like we're like looking at 12 million coins, about between like 8 and 12 million coins being transacted on a daily basis. Ideally, if we want to sustain push upwards, we are going to see, or we need to see, a stronger sort of network-wide activity overall, right? There we go. Okay, so any other coins that that we wanted to see, Brian?
You could do ONT.
Ontology. Okay, so ontology, we don't really, I think, have, we don't have, it's not an ERC coin, so we don't have on-chain data for, but we can look at its social data and maybe just general. Oh, we forgot to talk about Uni, so I'll talk about Uni very briefly before we end here. Let's see, ontology, maybe daily. Okay, so several spikes here around approaching tops in terms of social activity. Ontology has not really been talked about much over the past 2 weeks, which is good. Usually what you don't want to see, like if we zoom out just a little bit more, you'll see this massive spike here, right? Yeah, what you don't want to see is these types of moves, this massive spikes in ontology's social volume or the amount of mentions of ontology on the social media, because they will often coincide with like local tops incoming corrections. It happened here, here, it happened here once again. And so the fact that we're that the coin is currently flying under the radar a little bit, good for its sort of midterm performance. Now, it seems like the volume has been kind of peaking here during the September high, and then since then we've kind of not been able to sustain these same levels of activity or trading volume. Ideally would look a bit more healthy if we saw another push upward just to confirm the speculative demand for the coin. But overall, I think it's still relatively high, right? Ideally, like I say, ideally we would also be able to look at its on-chain activity, but our best coverage as far as on-chain coins is ERC20. So let's also look at the development activity of the ontology network. Seems to be have been slowing down a little bit. Since the sort of January and the February 2019 high, but it's still, staying relatively high. The ontology project is continuing to work on their platform. Doesn't seem to be any sort of massive moves that would, let us know that something might be in the making. Like, for example, I was looking at Chainlink's development activity recently, and I believe I saw a spike. Yeah, there we go. So something. Let's look at the old time. There you go. So you can see kind of the size of this spike just recently, letting us know that there might be, after a period of lull here, there might be something else that the Chainlink devs have been kind of working hard at. Usually this doesn't really coincide with like short-term price action, but it does tell us that in the midterm we might be poised for some announcement, product updates, which usually does tend to move the price as well. Okay, so I wanted to show a few charts as far as Uni is concerned. So Maxim, our founder, has tweeted this out a few hours ago, where we saw this sort of, OKX debacle in one chart, basically the way he points it. So what you're seeing here is you're seeing the price of Bitcoin in green, you're seeing the price of Uniswap in purple, and the amount of addresses interacting with the Unicoin in gray. So you can see that as markets started reacting to the OKX, their founder being arrested and the withdrawals being frozen, stuff like that. There's not a whole lot of details really at the moment. OKX is saying that it's nothing sort of to do with the actual exchange, but we'll have to wait and see. In general, the market has kind of responded fairly negatively. There's been a sharp drop off in Bitcoin's price from like 11.5 to 11.2K, I think. And at the same time, we saw a sharp rise in the amount of users moving to Uniswap in general, and the price of Uniswap also trending upwards as well. So we do have, if you look at Uniswap's on-chain activity, right, it's anything but dead. So let's look at the last 3 months. Brian, by the way, I think I see you typing or hear you typing, so it could be good if you can mute yourself just so the other people hear it. Yeah, so obviously what you're going to see for Uniswap, you're going to see this massive sort of a spike in daily active addresses as everybody poured in to claim their free Uni, right? Like, look at this. This is 180,000 active addresses. This is like almost Ethereum levels of activity. It was insane, and it remains insane. So if we zoom out of that, we can see more clearly what's been kind of going on. So here, for example, as Uni has been dropping, I think this also points to a bit of a holder capitulation, people moving their coins probably to sell as they were disenchanted by the price action, which, this redistribution event from weak hands to smart hands has once again allowed the price to push itself upward a little bit. So you can see this sort of move upward in Uniswap's daily active addresses over the last 24 hours. We would ideally like this to be a bit more pronounced and not just a one-off spike. So we'll have to keep an eye on this chart. But in general, the activity in the network is high. Like, people are using this freaking coin, right? It's 500, it's almost 5,500 daily active addresses. So if I go back to my filters here, and I look at all Ethereum based coins, and I look at all coins that have had, let's say, 5,500 daily active addresses. Okay, maybe a bit lower, 4,500 in the last 24 hours. So how many do you have in the last 24 hours? Actually, let's see, daily active addresses. Oh, I actually need to take the average, I think. There we go. Okay, maybe 55. Is it still in that range? No, so about 5,000. Okay, it's 45,000, 4,500. Yeah, okay. So this is the list of coins that has had more than 4,500 daily active addresses in the last 7 days. It's a very short list. It's Ethereum, it's Tether, and USDC and DAI, so 3 stable coins. It's the most popular ERC20 coin, Chainlink, and then it's Uniswap. So a month and a half removed from its launch, Uniswap's coin is still being utilized, and it's being utilized at a relatively high pace. Now, this doesn't necessarily coincide with any sort of short-term price predictions, unfortunately, outside of saying that we want to see this volume start to rise once again. But Uniswap's coin is nowhere near dead. One other thing that we might want to look at is what its holders have been doing, and especially its large holders. So, but I can't because some of our charts are missing. One sec. This is just daily active deposits that we can look at really quickly. So it seems like in general, less and less people have been moving their unit to exchanges. You can see this sort of spike here near the local bottom. One, like I said, probably some weak hands selling their coins. Similar thing happened here. So top holders. Actually, let me go back to our sandbox. Look at holder distribution, Uniswap. Okay, last 90 days. Okay, so let's look at some of their larger holders. So currently the price is like 2.5, I think, 2.9. Okay, so we can maybe take a look at the behavior of all holders holding 100,000 to 10 to 1 million Uniswap. So zoom in a bit. Okay. So we've seen this sort of move, which was pretty good for Uniswap's price action. So basically, as the coin started bottoming out at about 2.6, we saw a relatively high rise in the amount of Uni being held by addresses holding between 100,000 and 1 million Uni. So these are large holders, these are millionaires, which have accumulated from 41.7 to 47.8. So about 7 million Uni, or at these prices, about what? $18 million worth of Uniswap, right? Which was pretty high, and the price rebounded fairly quickly afterward, given the buy side pressure here. So in the past couple of days, we have seen a similar situation occurring. This is a relatively positive sign to look for if we see another sort of price bottoming out and the whale starting to accumulate once more. So in general, it seems like whales are still relatively high on this coin. Let's look at other sort of large address cohorts or groups. This is people holding between, or addresses holding between 10,000 and 100,000 Uni, going back and forth, really. No sort of clear distinction of their direction. However, just the fact that it's not going down means that, on average, these holders or these addresses are not done with the coin, so to speak. Let's look at the amount of addresses holding more than 100 Uni, and let's, so where's the price, right? So, okay, it has been growing or declining slightly. but people that are, or addresses that are holding more than 1,000 coins, so whales, it's kind of, you know, normalized here at about 3,000 addresses, and it's been so you see this rise, this sort of bounce back here near the local bottom. So we bottom out, and then the amount of addresses holding more than 1,000 coins spikes from 3.23 to 3.31, pointing to the fact that there has been a bit of a redistribution from weak hands to whales. Good for the coin, right? So ideally, we would see a similar sort of bounce off here in the next couple of days, pointing to the fact that whales are once again starting to, you know, stack up on some of their unibacks. For now, I would keep an eye on these three metrics. I would keep an eye on daily active deposits. So it seems like very normal behavior. When we see these spikes in daily deposits, it points to the fact that more people are looking to sell their coins. You know, sell side pressure is never really all that good for a coin in the short term. So we want to see sort of this decline in sell side pressure for Uniswap. We want to see a rise in its daily active addresses and the transaction volume as well. And we want to see whales looking to buy more coins, right? If this sort of constellation of events happens, it could be a relatively good sign for the price of Uni moving forward. If you want more information on Uniswap, go to Market Uniswap Protocol. We have a bunch of dashboards dedicated to Uni in particular. So for example, you can see exactly how much has been claimed in terms of Uni. So out of 150 million Uniswap that has been kind of allocated to be claimed by the community, 81% has already been claimed, and most of that has been claimed in the first 24 hours. And that's the reason why you saw this sort of almost immediate drop off in its price, because people were claiming their coins, immediately dumping them on exchanges to sell. So since that sort of decline in sell side pressure, we have seen way less volatility in terms of the Uniswap's price action, which makes sense, right? So if you want to see, you know, who claimed the most and where their Uni has gone over the last couple of days, you can do so here. One of the very interesting charts that, or very interesting dashboards that you can look at here is this one. This is the amount of Uni being held by different exchanges. And if you look at the 7-day change, this is another relatively positive development for Uniswap's price action. So we see that the biggest losers in terms of the amount of Uni being held on their exchange in these addresses are Binance, Huobi, and OKX. So centralized exchanges have lost a lot of Uni. Basically, a lot of Uniswap's token have been withdrawn in the past 7 days from centralized exchanges. On the other hand, the biggest gainer has been Uniswap itself. So people moving their Uni back to the platform. You know, if we continue to see this moving forward, it could also bode well for its short-term price action. So like I said, like, I don't really buy into this Uni FUD. I'm not saying that I would be surprised if I saw Uni fall down even further, but it's far from a dead coin at this point in time. I don't think there's like 0% chance that it's going to bounce back with a vengeance. So just keep an eye on it. Keep an eye on these charts, and you know, make smart decisions moving forward. So I think, guys, that's going to be it for this particular. I see a question: is the growing circulating volume going to have a prolonged negative effect on price action? No, I don't think it will. So let's see. Let's see what the circulating. So we can see there are two different volumes that we track on our site, just to give you a little bit of a better idea. So let me go back to my sandbox because it's listening to me more properly at the moment. So Uni swap. So we track, okay, let's just, you know, move this away. So there are two things that we track. We track the transaction volume, which is the total amount of Uni being moved on the network. And we track token circulation, which is the total amount of unique Uni being moved on the network, right? So for example, if I send you 50 Uni and you send the same 50 Uni back to me on a transaction volume chart, this would be registered as 100 Uni, right? Whereas on the token circulation chart, this would be only registered as 50. In either case, however, what we want to see is a sort of growing amount of users interacting with this coin, which will purport or sort of validate its growing utility, while at the same time, what we want to see is less sort of exchange side activity. So if we see a rising transaction volume and token circulation, so for example, we see Uniswap's transaction volume start to rise. One sec. So if we see Uniswap's transaction volume, 1 day interval, start to rise, whereas the deposit activity or just exchange bound activity, for example, the amount of Uni being moved to exchanges, continue to drop off. This points to the fact that the coin is actually being utilized while this utilization is not tied to sell side pressure. And this is the perfect sort of confluence of events that you can have. For example, here you saw a spike in transaction volume, but it was mostly driven by sell side pressure. Now, the fact that we bounced back from here means that this amount of sell side pressure was very quickly absorbed by whales. And we saw that a minute ago. So we saw a rising spike in exchange inflow, but at the same time, a bounce in the amount of holdings by Uniswap's whales, right? So what you ideally want to see is you want to see growing volume, pointing to the fact that more and more value is being transferred on the Uniswap network, which makes its valuation higher, while at the same time you want to see ideally declining amount of exchange-based activity, which points to the fact that people are not selling their bags. They're content with sitting on their Uniswap coins. Yeah, hope that answers your questions. Okay, guys, we're gonna cut it out here. Thank you everyone for joining us once again. If you have any additional questions, join us on Discord. I'm gonna listen back to this at 1/10 speed. Yeah, sorry, sometimes I ramble a bit too fast. I'm working on it. It's a professional deformity back from my debate days where I only had 7 minutes to talk about everything I wanted to. So anyway, thank you guys, everyone, for listening. Everybody that wants to try our platform and all of its metrics, as well as all of the templates that we were not able to show you today, check out app.sentiment.net and sign up for a free 2-week trial. After that, it's just $49 a month, which I believe is more than justifiable for the value that you're getting. Not only are you getting all of these real-time metrics and templates, you are also getting pro reports weekly, as well as daily insights on the cryptocurrency markets. So until next week, Brian, you want to sign us off?
Yeah, thanks, Tino. Much appreciated, everyone. Thanks so much for joining. Obviously, you can continue to ask any questions you may not have gotten answered in our Discord. And other than that, we will see you all next week here back on YouTube. Talk to you all soon.
Thanks, guys.